Hello friends, and welcome to this first session of this course, Simple Technical Trading Level 1. This is a course especially designed for the active traders, and it will be full of, as we say, practical elements. And Level 1 actually refers to the positional trading. So we are coming out with another course which will be more specific for the intraday traders or the day traders. So this is level 1, and for positional trading, when I say positional trading, it means that we are taking a view of the market or a particular stock for a couple of weeks, means a few days. So let us try to understand in this session, the first session, let us try to understand what is the science of price analysis and how we can use this science to our benefit and trade effectively. In fact, in this particular session, this first session, I will be discussing one particular aspect about trading, which is very important, and it is the starting point of technical trading. And if you get this particular thing properly, I think that your route to consistent profits is ensured. So friends, let us get ready for price analysis. What are we going to cover in this? So we are going to cover broadly four parts in this first session, and that is, the first is the introduction to this exciting science of price analysis. Then we'll also see how a particular price chart looks like. What are the characteristics of a price chart? And thirdly, we'll also have an idea about what are the assumptions on the basis of which the science of price analysis is based. And fourth, as I said, the most important starting point for a trader, and that is how to define your time frame. This is very important, and please do not miss this particular point. So friends, let us try to start the first session, the first part of the session, and that is price analysis. So what is price analysis? Before that, I'm fond of sayings, so I have got one very good saying for you, and that is, the future is nothing but the past entering through another door. Therefore, if we observe the past, we can definitely get an idea about future. And that is what the entire science of price analysis is based upon. The definition of price analysis: a study of past price and volume movement of a security done with the purpose of anticipating the likely price movements in the future. Okay, it could be a heavy definition. So let us try to break this down. Basically, it is a study of the past price and volume movements. So what are we doing in price analysis? We are trying to analyze how prices have behaved for a particular stock or a particular index, how the prices have behaved in the past, how the volumes have intermingled with the price in the last few days or few months or the last few periods. Based on that, for a particular security, we are trying to anticipate what is the likely movement in the future. So basically, it is a study of the past done so as to arrive at some conclusion as to the future possible movement of the price. So this is the definition, a simple definition of price analysis. Let us see how a price chart would look like. I think most of you have seen a price chart, so let us see what a price chart looks like. Well, this is the price chart of Nifty. This is the daily chart of Nifty, and what you're observing here, instead of a line chart or a closing price chart, what you're observing is called the candlestick chart. Now, each and every day's working is depicted here in the form of a candle. So you are having a series of red and green candles. So each day represents one day's working. Open, high, low, and close. These are the four price points which are getting depicted here. So this is a candlestick chart. In fact, we are going to discuss about candlesticks later on in depth. So what you are observing on this price chart is that any security price usually moves in a zigzag fashion. So when I say the prices are going up, it doesn't mean that they are only going up straight. Every day it is going up. No, it doesn't happen that way. It is always a zigzag fashion. So it always a zigzag movement. Secondly, many times you might feel that the price movements are erratic, but when viewed from a longer perspective, a clearer price direction actually emerges in front of you. So for example, in this particular Nifty chart, this is up till I think August 3rd or 4th. What we are observing is a bird's eye view tells us that yes, the Nifty is in an upward movement. So when I take a longer perspective, a clearer trend or a clearer price direction emerges from the price chart. So this is the advantage of using price charts for our analysis. Now let us see the assumptions. So before that, again, one very interesting saying which I have noted, and that is price is nothing but a reflection of the collective behavior of all market participants. Let us see the assumptions of this business now. What are the core assumptions? The first and foremost assumption of price analysis is that there is a reasonable level of market participation. So if we are analyzing a stock or an index or any security, we are assuming that when we do price analysis, we are assuming that there is a reasonable market participation, good level of volumes, because in case it is not so, then our price analysis may not be as as confident. We may not be as confident as we would otherwise be. The second assumption is that markets always discount everything. Markets factor in all information available. So whatever the current information is with the market, everything is reflected in today's price. If any of the factors which are affecting the markets, if any of the factors change, that will lead to a change in the price. Third and very important assumption is that markets always move in a trend. The last slide showed you that the price of Nifty was going up. So it was in a particular trend. It was in an uptrend. Therefore, markets always move in a trend. That is a basic assumption. Means, can I also say that it is an assumption in a different way, as a corollary? We can say that markets are not erratic. They are not random. There is an underlying order among the chaos what we are seeing. And the fourth and probably very, very important assumption is that history repeats. There is an interesting saying, friends. I have written this saying in my book also. What we learn from history is that we never learn from history. Interesting saying, yes? So basically, history repeats is an assumption of price analysis. What it means and the importance of this is that for us is that whatever the price movements have happened in the past are likely to recur in the future also. So if I analyze the price behavior of the past, I can, with a reasonable level of probability, I can assume, I can anticipate the likely price movement in the future. So history repeats. Now let us come, friends, to the very important point of this discussion of this session, and that is time frame. Please read this statement which I have written. People lose money because they are not able to define their time frames. It is a very, very important starting point. And believe me, friends, when you go back in history of your own trading or own investing, you will realize what I'm saying right now is definitely true. Before you start trading technically your stocks or indices, first think and define your own time frame. Ask yourself, are you an intraday trader? Means, are you keeping your positions for just a few hours? Or ask yourself, are you a short-term trader? You are keeping your positions for a couple of days or a few days. Or are you a positional trader? You are keeping your positions for next few weeks or maybe a couple of months. Well, friends, think about it. Have we not had a situation where we had initiated a trade in intraday to take that small profit, and thereafter, because we could not take that small profit, we took that in delivery, means we took that stock we had traded for intraday, but we have taken in our demat account. This is a normal thing which traders do, and this is a very big mistake that traders do. Believe me, friends, this is very important. In fact, there is a very interesting saying in a sarcastic definition of investments, and someone has very sarcastically defined investments as: investments are nothing but short-term trading decisions which have gone wrong. Think about it. It is true. Many of our stocks which we hold in our demat accounts probably have come there, have appeared in our demat account because we had someday traded for intraday or a short term, and then it is still remaining with us. Friends, your time frame definition is very, very important. In fact, when I discuss the various concepts of price analysis, I will come back to the time frame element, and for each of the concepts I will tell you how your concept will change with the change in the time frame. So friends, this is as far as the first session was concerned. Thank you very much for a patient listening, and I am hoping that the next few sessions will be very, very practical, and you shall enjoy them to the fullest. Thank you, and see you in the next session. Thank you very much.